What is going on, guys? It is Austin. It is Thursday, January 27th, 2022. And it's been quite a while since I did a video, kind of more of a lesson-based video. And it's funny, I did a few kind of more lesson-based videos just talking, kind of looking in TOS, going over trades and kind of how TOS works and stuff like that. And those are actually some of my more popular videos. And so I thought I would do one here today because I took a couple trades today that I think kind of zero in on a certain subject, and that is uh, relative strength slash, in this case, weakness. But more than that, market direction and how powerful market direction is in day trading. And I think the best place to start is by thinking of kind of putting myself in a beginner trader's shoes and actually in my own shoes just a few years ago when I first started doing this. And one of the things that has become so crucial to my process now has been looking at the market in the morning and while I'm in trades. I actually have, two monitors, and in my other monitor I'm looking at um, the market, the Nasdaq, the S&P, and what they're doing even minute by minute. So even while I'm in a trade, I've kind of got, one eye over here on the stock that I'm trading and then another on the market and exactly what it's doing. And it's so powerful to do that because, well, I'll kind of get into that. But for my trades today, it was very apparent that without that, I think that you become kind of driving a car without a steering wheel, or man, I always go for these analogies, but you know, anyway, moving on. The market is your best tool for kind of gauging whether you're in the driver's seat on a trade or not. So kind of looking at this trade here, and again, I kind of trade in the morning, and on this particular day, the market sold off quite a bit, but it did so in the afternoon. Um, but looking at this trade here, I got in this trade, one, because I thought the setup was good. And this video is not to say at all that setup recognition isn't important. Setup recognition is extremely important, and there's a bunch of different aspects to trading, understanding your platform, all that. And I have those other lesson videos up on that subject. But in this video, I'm talking about kind of relative strength, relative weakness, and market direction, how you can pair those two together to create, to try to get into trades in which momentum is going to be strongly in your favor. So number one, I like the setup on this. Watching on the open, you can see, I took this trade about 10 minutes, less than 10 minutes into the open. And I've got this, my whole trading strategy is based off of multiple time frames and looking at multiple time frames. And so, um, I think that you get the surge off the open, nice top wick here. This candle kind of engulfs this entire green candle, and then within two candles, we break through VWAP. Very bearish move here. Tries to come back up. Nope, we're coming down. Looks like it's curling here. This is actually where I jump in short 234.94, and this is, really kind of something, I would do quite often. This is kind of a good short entry, here in front of VWAP. Your stop is pretty close by. You can stop out here at this pre-market level. You could give it all the way up to the top. In this case, that was not necessary. The stock came down. It tried VWAP again, um, and then failed again. Um, but again, let's to really kind of get to the subject matter of this video, let's look at what the market was doing at these exact moments in time. So here I jumped into the short at 9:39. It was, didn't really break down until 9:44, 9:45. So let's take a look at what the market was doing at that point in time. And I'll zoom in here. I'll actually go to a 1 minute so you can see on those exact minutes kind of what was going on and what I was looking at. And in this case, I would kind of be looking at the Nasdaq in this case. I believe the Nasdaq has a greater weighting in NVIDIA. NVIDIA has a pretty heavy weighting in both these Oops, what did I just do? In both these indexes, hold on, let me just refresh this because I just screwed something up. But what I learned pretty quickly, and this is kind of spoiler alert, actually I won't spoil it. So I'll just ask the question and I'll give you guys a few seconds to answer it. But let's get to that 939 spot. So 939 right here. And in this exact minute, well, right here, we've come down and then it didn't start breaking down right until 944. So what did I notice about this stock? And let me do the same on the Nasdaq. Bear with me here. This is going to be good, I promise. So what was I noticing while I was in this trade? Remember, I got in the trade at 939, so right here and right here, 939. This is the candle on the S&P 500 and this is the candle right here on the Nasdaq. Both have very strong weightings in Nvidia. What did I notice about this trade and this stock and this position? Am I in control or am I not in control between 939 and 944? And I'll give you some time to think about the answer. Was I in control on this trade or not in control? You can see by price I'm in control because there's really no reason to get out. But what is kind of going through my head um, at this moment in time about this trade? Remember, 939 to 944, just a 5-minute period right here. Okay, so let's get to the answer is that the market is surging across those 5 minutes, just surging up in, both indexes. These are, these indexes are different, but, they move kind of in tandem. Um, and NVIDIA, which, loves to move with the market, is here expressing extremely strong relative weakness. This is a lot of weakness. In fact, this is something you don't see too often. Usually, I mean, I would have at least expected, a breakthrough VWAP in here, but in those 5 minutes, Nvidia is flat at best, really not going anywhere. So here I'm thinking in this position, I'm in control. So the answer is I am in control because you already know that this stock is relatively weak. If it's surging, if the market is surging and this, a stock you're looking at, has, is correlated with that index and is not expressing that same energy, not, uh, you know, not displaying a propensity to, uh, move with the market, then that that is weakness. That is telling you that the stock is weak. And so what is kind of the follow through of that is, well, if we get any kind of turnaround in the market, um, you know, this stock could fall. This stock can fall fast and it could outpace the market to the downside if we get um, any kind of pullback. And you can see in here, there's just kind of 2 minutes of just kind of pullback. Here, this candle gets eaten all the way up. Let's see what Nvidia was doing right there. 935, 945, 946. This is where it had that first kind of leg down. The market has kind of another big run upside before it kind of has this, you know, more decent sized pullback here. And you can see Nvidia has that kind of run up, but it only kind of just gets to meet the pivot low here as a high and then comes down and makes a lower low. Um, and again, this video isn't so much on like the profit taking spots and kind of what I'm doing in here. It's more just to show the absolute weakness of Nvidia. And I did end up getting out on this candle because this was the first sign of like, okay, typically the way I trade is like, just looking at trends, um, pivot low, high, lower low, higher, lower high, lower low, lower high, lower low. And then here we're kind of into that spot where it's like, okay, looks like we're gonna start to make the first higher high. That doesn't mean the trend's gonna change. It's just, if you look at, you know, any kind of trend, you want to see higher highs, higher lows, higher highs, higher lows, or lower lows, lower highs, lower lows, lower highs. So kind of when I see that first higher high, that's kind of usually kind of a hint that we may be getting a reversal in trend. So this kind of candle kind of scared me of that, where it looked like it should kind of make a high and then come make a lower low. This candle kind of ripped off. So that I took out. I just was like, yeah, I'm just gonna get out. But anyway, I'm not really here to defend my 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 exits on this. You can see this stock moved quite a bit lower throughout the entire day. So in that aspect, I missed a bunch of this trade. But just for while I was in the trade, um, that's kind of what I'm looking at here, and just what the market was doing, and recognizing that even though that the market was ripping, and I probably should have been looking for longs, I didn't get out of this position prematurely because I recognized the just sheer weakness of this stock. And where does that weakness come from? News on it in the morning, or maybe this setup right off the bat that's just kind of a blow off. And then look at the 30-minute chart and how strong this was kind of the number one reason I liked this setup. And I only noticed the weakness kind of after I took the position. Quite honestly, I didn't notice the weakness in this name before I took the position. That was more something I noticed after I executed the position. And that kind of bolstered my confidence in the trade. But the kind of number one reason I got in this name was this setup right here and what I saw developing. When this came back down, I thought it was a really attractive short because we got this nice wick and this candle closed. This first candle here in the pre-market closed below this 200 MA, and then this wick comes down and this candle comes all the way down. This just looks very bearish, looks like a nice rejection of that 200 MA. That's exactly what we got, and it did continue lower kind of throughout the entire day. Um, and kind of speaking of blow-offs, I had another trade today, and full disclaimer, I had a couple really kind of nasty trades today too. I did end the day kind of nicely green, but I had some trades that, that nice trade on Nvidia and this really nice trade here on Netflix. The day should have been better than it was because I gave back a little bit more than I wanted to. But let's continue talking here. And looking at kind of what the market did between these periods, 10:20 and 10:39, the market did come down quite a bit during that time, and so Netflix kind of moving with the market there, but still weak. There were other names that were holding up a lot better. But let's see again, 10. So I got in this position 10:22. So market coming down at that point, and then kind of it hit that low at 1040. So that would be right here, kind of at this low. So this is an example of a name that kind of traded more or less with the market. But once again, um, even if you're not examining relative strength, relative weakness, you really want to be looking at the market. Why? Because stocks move with the market, right? The market is basically just a way of saying stocks move with other stocks because the market is just a index where different weightings of stocks are put into one index and it's kind of like a focal point at which you can see expressed in one figure a bunch of movement in a bunch of names. um, and so stocks are correlated with each other, and so it's, we can say that they're correlated with the quote unquote overall market. And when I say that, I really just mean like S&P 500 futures, NASDAQ futures. And that's what I look at while I'm in these trades. And so to confirm that I'm on the right side of a trade or in control, I'll be looking at the market and what it's doing real time while I'm in a trade to make sure that, oh yeah, I'm short, market's coming down. Yep, we're looking good. Usually, I'm not looking at a 1 minute here. A 5 minute is fine because you can see everything that you can see in a 1 minute. It's fine. I use the 1 minute more for kind of when I'm looking at these trades and when candle patterns and exact prices become more important, but it can be always good to zoom out. But that's all besides the point. But basically, when I started this, I was at the beginning of this video, remember I said that when I first started trading, I didn't look at the market so much, and I didn't look at S&P 500 futures, NASDAQ futures while I was in trades. I thought more like my thinking was more like I really like the setup on this stock. I'm going to take it to a certain direction, and I have my stop and whatever. So very, like similar, right? But the reason that looking at the market is so important is that realization once you open your mind into thinking and understanding that, oh, I can like a setup as much as I damn well please, but at the end of the day, if the market wants to go a certain direction, that is going to have a at least a quote unquote impact on your trade. it just will. And again, let me emphasize the an exception to this is that if you're trading small caps or something like that, if you're a small cap trader or anything like that, then um, this this won't be as important. Small caps, with like pharmaceutical news, like oh we cured cancer, that pop up and move up 500%. th- that that's not what I'm talking about. I'm talking about if you're trading mid to large cap names, the names that you might see on my watch list, like those are the names that are going to move um, with the market. And so not looking at the market while you're in a trade is you're just in my eyes you're just blind. Like if I were in a trade without looking at the market, I'd be really like guessing like what is the market doing? Because the market is how you gauge whether a stock has relative strength or relative weakness. Without it, you can't know if what you're trading has relative strength or relative weakness. Um, so it can be really helpful to to look at the market, extremely helpful, and not just helpful, I think necessary. Um, in lieu of a bunch, or not, sorry, not in lieu of, that doesn't make any sense. Along with a billion other things that you should be looking at, volume and price and setups like this. Like today, I'll show you in I'm digressing a little bit, but this is just kind of the way I function, the way I work. But in my Discord today, I kind of showed off this trade and this my explanation for kind of getting out, and I'll share what I wrote here is that I wanted to give this one an opportunity to move even lower under 380, which you can see it didn't do. But it's not meant to be right now. Setup recognition is so important even while you're still in a trade. Notice what's developing. You can see I drew out the flag pattern that was taking place. If and when you see this, all you can do is plan ahead for if the setup resolves in your favor or not. So you can see the bull flag, or it turned out to be a full bull flag that it broke out of. Um, right here. And so this is something that I noticed developing while I was in the trade, drew it out, and then it becomes very simple. If it breaks out, I'm getting out. And so in this case, the reason this is so helpful is um, normally without this, imagine you didn't draw this and you're just trading the levels. Well, you'd probably set your stop above this high right here. Um, this price level. Maybe some would do it at VWAP, but I would probably do it right there at whatever that high is, right there. But what's so nice about this is that once you develop this setup and this breakout, you can really set your stop lower and save a little bit more money when this setup works to be a bull flag and breaks out to the upside. I got out straight away as it broke out. And I saved myself some money where I would have instead probably stopped out up here. So it's better to identify the setup and stop out when this setup resolves in the wrong way. This could have also been a bear flag, and that's why I was staying in the trade. If this wants to break down and continue lower, then great. I'm holding those shares all the way down. So that's what I said here. If and when you see this, all you can do is plan ahead, blah, blah, blah. In this case, it turned out to be a bull flag. As it broke out, I stopped out. It's now trading $3 higher than where I stopped. And if the flag resulted in a break lower, I'd still be in the trade, and obviously that's better. So this is a glimpse of how I trade based off levels and setups. Not to say this is not to say this is expert level shit. It's not. On the contrary, it's quite simple. And it is quite simple. And then I continued. Lots of day traders overlook the simplicity of price levels and setups and focus more on wacky indicators that convey nonsensical and just plain distracting information. Being focused while you're in a trade is so important. You can't waste time or brain power on BS indicators. I don't even have RSI or MACD on my main trading chart. It's just distracting and, in my opinion, detrimental, giving false signals all too often. Stick to price levels and setups and trade simply. And that this is just a coincidence that this happened today, but like this is the trade. This is like this is like a I look at this and I think it's like a piece of artwork. Like I'm not even trying to gas myself up or anything, but like this is how it should be done. And I have so many bad trades that like I that are just embarrassing. And I've shown all my bad trades before. I did daily recaps every single day for like a year or 6 months, or I don't know, felt like a year. However long I did it, you can go back and watch every single one and see every single freaking trade I took. So like I've been very public about all the trades I've taken. But this, I feel like is like one of like those rare trades where it's just like this it shows everything. This shows setup recognition while you're in a trade. It shows looking at the market and realizing that yep, you're in control. This stock is moving down with the market. It's not relatively strong. It may not be relatively weak, but it looked a little relatively weak to me. It looked top heavy there at 395, kind of a blow off top there, and coming back down, hopping in the short, taking profit along the way, identifying the setup. Uh, and everything. It has everything. And so this is like I really am like excited to show that example because I think it's a good one. Okay, so that kind of went off. Okay, my headset died there for a second, but that kind of went off. I kind of went off in a tangent there, but anyway. So I hope that this was helpful for you. If it was, please like the video, subscribe to the channel. I want to do more of these lesson videos because I think they're really good, but you know, I'm trying to think of I try to think of topics and stuff to talk about that would be helpful. But anyway, I get really excited to talk about this stuff and share this stuff, and I just love trading. So if you want to follow my journey, subscribe. You can join the Discord, links in the description, but it might be closed now because I'm closing it soon. So I don't know by the time you see this, who knows? But anyway, so that's that. Everything is there in the description, and I hope to see you guys next Tuesday. I'll be live at 8:45 in the morning, so hope to see you guys there for that. And anyway. Hopefully I covered everything and said everything I wanted to say. If not, I'll just make another freaking video and then that's that. So, all right, thanks for sticking with me and bye bye.